Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. All right, so before we start our Daily Dose of Market Insights, today will be Wednesday, the 4th of October. Let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, so as usual, this will be the three key takeaway. Yeah. Sorry, give me a minute. Yes, so as usual, this will be the three key takeaways for our daily dose of market insights. Will be a recap of what happened last night. That means in terms of the European session and the US session. What are the key events and economic data to look out for today, and as well as a roundup of the short-term technical outlook on the key asset classes that I will share with you all later. Okay, so let's start with what happened overnight first. So overnight, the most important thing over here that took shape, actually three things take shape overnight is within our expectation, the benchmark US stock indices continue to actually resume their short-term downtrend, despite the fact that on Monday, we start to see an outperformance of the 7 mega cap stocks. So we do highlight in our daily dose of market insight on Tuesday itself that be aware of this weak market breadth in the US benchmark stock indices, despite the fact that even though on Monday US session, the 7 mega cap stocks, that means talk about the likes of Apple, Amazon, Tesla, and Nasdaq, Tesla and Nvidia managed to actually close positive, but that actually doesn't alter the Nasdaq 100 short-term technical downtrend. So later I'll cover what's going on in the technical outlook on the Nasdaq 100. But all in all the major stock in US indices closed in the red. So the SPX lost negative 1.37%. The Nasdaq 100 closed down the worst performer at negative 1.83%. The Dow Jones negative 1.29%. And the Russell 2000 at negative 1.69%. So all in all, right, pretty much this primary weak performance of the benchmark US stock indices has started to spread across to the rest of the world. So we start to see that in a month of September, very lackluster movement in the global stock market as well. That means we talk about from Asia and Europe. Asia like the Hang Seng and the Nikkei 225, and Europe we talk about the DAX. All of them actually continue to actually exhibit very short to medium term weak technical elements. That means, i.e., they are still in the midst of what I call trading within their short to medium term downtrend. Okay, so later I'll highlight the technical elements on the DAX and as well as the Hang Seng Index or the Hong Kong 33 column platform. So over the FX market, one thing that took shape over here in terms of there is actually a we call it unconfirmed report, unconfirmed report that the BOJ, Bank of Japan, actually intervene in the FX market by selling dollar and buying the yen, the Japanese yen, under the instruction of MOF. But despite the fact that there are actually major media outlets that try to call MOF, that means the Ministry of Finance, to confirm about this intervention, but no words out from there yet. I mean, over here, but for sure, if you look at the price section of the dollar yen, we in 15016 on yesterday, right at the start of the US session. Within 5 minutes, it plummeted close to 14733. So that's close to 3 big figure. So the only way that dollar yen can we call it trigger such sell off, significant sell-off within 5 minutes is from the hands of BOJ intervention. So over here, right, later I'll show you the chart of the dollar yen. So let's see where dollar is heading next from at this juncture. So now, without further ado, right, let us share my screen again, another screen, pardon me, on the other key economic data releases and events that took shape yesterday. All right, so now let me go to my screen. Okay, so this is actually the heat map. Okay. Okay, so let me focus more on the screen. Yeah, so this is the heat map yesterday that took shape on the S&P 500. So almost a sea of red. So the worst performer, finally, the true face of the 7 mega cap stocks took shape. They're the worst performer yesterday. Microsoft down negative 2.6%, Nvidia negative 2.83%, and Amazon negative 3.66% over here. So actually, there are also some, I would say, one particular, I would say, server fundamental event that actually reinforces this short-term downtrend that has been intact on the US benchmark stock indices since late July this year. So one of the reinforcement came from this report, the JOLTs report that I highlighted yesterday. Yeah, this is the report. So it's a not really key US economic data report, because the key economic US data report still comes on this Friday, non-farm payroll. But the jobs number over here, jobs opening, they actually surpassed the expectation of 8.8 million. So they came in at 8.61 million. So if you look at the trend of these jobs opening, JOLTS jobs opening, it actually is the highest level that is seen so far since April. Okay, so there's a very quite a significant uptick in job openings based on this JOLTS report. So all in all, what it means that it's actually telling us that the US job situation or the employment market in US is still robust, despite the fact that the US Federal Reserve, the central banks, are still maintaining a higher level of interest rate. That means, i.e., there is actually less economic negative impact at this moment in time to the US job market. So that actually supports Fed Powell and the more hawkish elements in the US Federal Reserve, or the Fed, to maintain interest rate at a higher level for a longer term period. And with that, there's actually some Fed speak that took shape yesterday over here. So there's this Fed policy maker called Mester. So she actually backed the November rate hike if the economic holds steady, which is actually pretty much evident by just now I shared with the JOLTS job openings report. And also there's another Fed official called Bostic. He actually advocate for a longer period of time, a higher interest rate for a longer period of time, and you only expect one rate cut near the end of 2024. Still recall that in the next year, the consensus based on the Fed Fund futures market is to at least have a rate cut at the middle of excuse me, by June, July next year. But however, based on this Federal Reserve official Bostic, he don't expect it to come in June to July next year, but however towards the end of 2024, that means Q4. So that's actually much more hawkish than the market is actually expecting. So with the fact that if majority of the Federal Reserve officials start to have this particular view, what we could see over here is that there could be a potential mispricing by the Fed funds futures market. That means too optimistic for the first rate cut to come in June to July next year. So if that starts to get adjust going forward in the months ahead, as this Federal Reserve official starts to guide the market based on their current hawkish, relatively more hawkish vibe, we do reckon that they could potentially see a higher increase in the US 10-year Treasury yield. So technically speaking, the US 10-year Treasury yield is not done. It's not over yet. If you look at the up move that took shape at the start, at the middle, at June this year. So later I'll share the chart of the US 10-year Treasury yield. Why is it important? Because if this US 10-year Treasury could inch upwards, it could add on further downside pressure on risk assets like equity. That means, i.e., potentially there could be more potential downside on the benchmark US stock indices, which could actually spread over to the rest of the world as well. Okay, this is pretty much one of the pretty much important instrument to actually monitor at this juncture. If then for sure the rise in the US 10-year Treasury yield, that could actually put up more pressure, upside pressure on the US dollar, especially against the European currency. So now, without further ado, right, these are the key economic data that took shape at event that took shape yesterday. So what are the events to look out for today before we go into the short-term technical outlook? Will be this over here. Let me share with the calendar. So for today, Wednesday, right, just a while ago, we have this RBNZ interest rate decision. So no change as expected at 5.5%. within market consensus of 5.5%. So very similar of the guidance given from the cousin, which is RBA, that announced yesterday. So with that stand back for today, it's actually extending the third straight month of meeting of pause. Then what they actually seeing over here is that at the end of the day, the statement saying that it got to stay elevated for a longer time, given the fact that they got to see inflation returning to a goal of 1.3% annually in the second half of 2024. So there's actually also risk of higher oil prices. But basically why they actually choose to actually hold interest rate level at 5.5% now. So more or less the hiking cycle has been done. So due to the fact that because of weaker global demand, especially from China, okay, that could weigh on New Zealand export revenue. So for sure, there's actually a high odds that at this point in time it's a 5.5%, but now they're actually most likely to remain on hold throughout the rest of this year and perhaps going forward into at least the first half of next year as well at 5.5% for the RBNZ. All right. Now, other economic data to look out for will be in Europe later on at 4:15 p.m. Singapore time. ECB President Lagarde will have a public speech. Then we have Eurozone retail sales month-on-month figure for the month of August at 5 p.m. Singapore time. Then thereafter that we have a pretty much quiet US session in terms of economic data. Then we have another we call it employment data, which is a private because this is a private sector compiled ADP Employment Change that is out at 8:15 Singapore time later on. And most importantly, this ISM Services PMI for the month of September. Why is it important? Because this is actually telling us a survey, a sentiment report from the services sector in the US economy, given the fact that we know that primary majority of the US economic growth is derived from the services sector. So something to pay attention to. So that will be up at 10 p.m. Singapore time. So market is still expecting an expansion in the services sector for US, but slightly below August figure of 54.5 because they're expecting a slight dip in terms of growth at 53.6. Okay, then thereafter you have throughout the US session, I believe that at the start of the US session later, there will also be this OPEC plus meeting to decide on the supply output from OPEC and OPEC plus members. So later I'll share with you on the short-term technical outlook on the WTI crude oil price that could potentially impact. So if OPEC plus members decide to actually cut further the supply of oil from OPEC and OPEC plus, potentially it could actually support elevated oil prices going forward into the winter months of 2023, pardon me. So that is the key what you call economic data event to look out for today. And now let us start with the FX market first. So over at the FX market over here, let me share with you the rolling we call it rolling 1 month performance chart of the FX market. Okay, so now today will be the 4th of October. Okay, so if you look at the rolling 1 month performance, okay, so what we could see yesterday, there was actually a big dip on the dollar yen, the big sell off in the dollar yen due to that unconfirmed intervention from BOJ as instructed by the Ministry of Finance to sell dollar and buy the Japanese yen after hitting it at that key resistance level at 150/1530 on the dollar yen. So yesterday dollar yen intraday high was 150.16 that took shape right after the release of that significantly better than expected JOLTs jobs report from US, out from US. So, but however, overall, if you look at the trend of the dollar, still pretty much strong against the sterling, against the Swiss franc, and against the European currency. Then if you look at over here, it's also start to inch up against the dollar sing and against the CAD and against the Kiwi and against the Aussie dollar as well, but pretty much flat against the CNH due to the fact of potential also intervention by the Bank of China. So this 1 month performance, if you look at the rolling 5-day performance, is much more pretty much obvious over here. So right now in the last rolling 5 days performance, right, what you could see over here is that the dollar yen right now is the dollar is actually the weakest performing currency against the yen due to yesterday's intervention. All right. as you could see over here is this pretty stock drop move, and after that it start to trade sideways. Okay, now with that, let's start off with the short-term technical outlook on the FX market first. Start off the dollar yen. So over a dollar yen over here, right? So let me go to the dollar yen chart. Okay, where is the dollar yen chart? Okay, let me go to the dollar yen chart. Okay, yeah, this is the dollar yen chart. So this dollar yen chart, right? What we could see over here is that this is a kind of a bearish ascending wedge configuration. Hit the high over here before the sold off took shape, but managed to bounce off the 20-day moving average, which is also the lower boundary of this medium-term bearish ascending wedge. So this is the daily chart. So what you could see over here is that there's pretty much two key levels on the short term. The upper end of this wedge here at 150.30 and the 20-day moving average. So if I were to zoom in into this area here, from we could actually expand, this will be the 1 hour chart. Yeah, so this is where the big sell off took shape on the dollar yen. So in order to see such huge, okay, so if you go to the hour, if you look at the 5-minute, right, it's much more obvious. Okay, so in order to see this huge sell off in the dollar yen in the 5-minute price action, usually is done by a big market player, and this is usually very high likely is a potential intervention from BOJ under the instruction of MOF. All right, then from here, let us take a look. Go to the 1 hour chart. Then thereafter, right, there are some buyers coming in to actually support at the 20-day moving average. So still recall that previously, right, we do have a short-term bullish bias heading towards 150 figure slash 150.30. So more or less has been hit at 150.16 level yesterday, intraday high. Then we have this support level we did highlight as well after the breakdown of that pivotal support at 149.16, 148.40 slash 148.05, which the market interestingly managed to held at this level and bounce off it, which is the 20-day moving average, and also this previous minor congestion zone from 21st of September to 22 of September. So indeed, this is actually a key technical level that managed to help on the downside. So for today, right, what we could see over here is that overall, the short-term technical picture on the chart itself has started to turn bearish. If you could look at the hourly RSI, okay, has started to shape lower high. You could see here lower high at this point in time. And also the RSI also managed to actually now trying to inch off below the 50 level. So all in all, right, this is what I call short-term downside momentum that is still pretty much intact on the dollar yen chart or the hourly chart. So I'll be using 1530 as my key short-term pivotal resistance for today. Flip to a short-term bearish bias. Okay, to retest this 148.40 slash 148.05 level. So if we start to see a breakdown below 148.05 level, potentially we could now start to unlash or trigger a kind of a minor short-term downtrend movement in the dollar yen towards the next support level at 146.10 slash 146 figure level, which is this minor we call it a swing low area of 4th of September at 11th of September. And if you look at the 146.10 or 146 figure level, also is also pretty much more evident or clear on the daily chart itself from this previous level over here. Okay, previous support level breakout over here now turns into a pullback support at the 146.10 level. All right, so this is how I derive the next key short-term support level of 146.10 slash 146 figure level if 146.05 breakdown on the downside. All right, so that's for the dollar yen. So but however, the other dollar pair against the European currency, the dollar strength still remains pretty much resilient on the euro dollar. So let's take a look at the euro dollar now. From here on the euro dollar chart. Okay, so this is the euro dollar chart. So on the euro dollar chart over here is that there's no clear signs of a bearish exhaustion at this point in time. So we will be still using, because in there's this huge slide here. So in the middle of nowhere, there is actually nothing. So other than this key congestion zone, which is key congestion level here, which is our yesterday's short-term pivotal resistance at 1.0560. So I don't want to tie it so tight to 1.05 level, which is this former 28 September swing low area now turns into a pullback resistance. So I'm still maintaining 1.0560 as a key short-term pivotal resistance. Maintain that short-term bearish bias on the euro dollar to expose the next near-term support level at 1.0420. But however, if we start to see a break up with an hourly close above 1.0560, then this short-term bearish bias condition will be invalidated to see the start of another counter trend rebound, a short-term counter trend rebound to test the next intermediate resistance at 1.0630, which also confluences with the downward sloping 20-day moving average. So that's for the euro dollar technical outlook. So now what's the technical outlook on the sterling dollar? So very similar of the euro dollar as well. Price action still remains below the 28th of September former swing low now turns into a pullback support at 1.2110, but it's a bit too tight. Also, I will still remains 121.85 as my key short-term pivotal resistance for today. No change. Still maintain that short-term bearish bias condition to look for a retest at 120.50. A breakdown below it exposes the next short-term support level at 119.60. However, if we start to see an hourly close, a clearance above 128.85, then this short-term bearish bias condition will be invalidated to see another round of short-term corrective, short-term counter trend rebound towards the next intermediate resistance at 122.70. We saw confluence pretty much closely with this downwards sloping 20-day moving average. All right, at also 1.20, also coming close to this 1.2270 intermediate resistance. All right, so still maintaining that short-term bearish bias condition on the sterling dollar. Okay, so one particular yen pair that I'll share. Previously, I shared with you the Swiss yen, the euro yen, and the sterling yen. So all this has hit the near-term support level, which I covered in the last week or so of the daily dose of market insight. So let's take a look at the Aussie yen. So the Aussie yen over here, what you could see is that yesterday huge plunge broke below the 20-day MA right after RBA meeting. This one further reinforced by the BOJ intervention. And what you could see over here is that price action managed to bounce off from the minor swing low at 8th of September. So all in all, what I could see over here is that this is potentially the start of a short-term downtrend on the Aussie yen after a bearish reaction of the 96.88 level. What's this 96.88 level? Is in fact a long-term circular range resistance that kept previous significant bullish strength of the Aussie yen since October 2007. So this is indeed a key, we call it a bearish reversal that the Aussie yen took shape over here. So all in all, what you could see, this is the hourly chart. So we'll be using the 20-day moving average now acting as a resistance, which is also confluence with this former swing low now turns to a pullback resistance as well at 94.90. So as long as 94, of course, potentially now there could be a short-term rebound, given the fact that the RSI now has started to exit from the oversold region level over here. But so potentially 94, this around this region here between 94.20 to 94.90, so that could be the potential rebound to take shape. But however, using 94.90 as a potential key pivotal resistance level to cap this potential short-term rebound. So as long as 94.90 level is not surpassed, so this is the short-term pivotal resistance level, this Aussie yen cross pair, this cross pair Aussie yen could potentially resume is impulsive down move within this short-term downtrend phase that is intact or in place since 29th of September high to retest 93.70. A breakdown below 93.70 potentially could expose the psychological level at 93 level. Okay, so the after below 93 level will be the 200-day moving average acting as support at 92.30/92.25. So overall, bearish bias condition in the short term for the Aussie yen as long as 94.90 key short-term pivotal resistance is not surpassed. But however, if we start to see a breakup above 94.90 and hourly close above it, then this short-term downtrend scenario will be in jeopardy to see a further squeeze up towards the next resistance towards 95.70 on the Aussie yen. All right, so that covers much on the short-term technical outlook on the FX market. So now let's zoom in to the stock indices. So for the stock indices, let us start with the Hang Seng first, which is called the Hong Kong 33 in our platform. So yesterday we do have a bearish bias condition at 17,680 key short-term pivotal resistance. So given the fact that the Hang Seng going to inch much lower and shape a lower high, so we're using a tighten key short-term pivotal resistance for today, former this 17,370 level, former a minor range, minor swing low now turns into a pullback resistance. So as long as 17,370 short-term pivotal resistance is not surpassed to the upside, potentially the Hang Seng, the Hong Kong 33 index could shape a further we call it a down move to test the next support level at 17,060. A break below it take us down potentially further to the next support at 16,800 on the Hong Kong 33 index. Then overall here, what we could see over here is that there's no RSI remains bearish, no clear signs of a bullish divergence yet. So as long as 17,370 holds the short-term, the tighten short-term pivotal resistance. But however, if we start to see a clearance with an hourly close above 17,370, then this we call it short-term bearish bias condition will be invalidated to see a start of a short-term counter trend rebound towards the resistance level at 17,680, which is also close to this minor descending trend line resistance that is in place since 4th of September high. Okay, so that's for the Hong Kong 33 index. Now moving on will be the German index, the German 30. So the German 30 going to inch down lower right now, coming very close to the short-term support level at the support level that we highlighted yesterday at 15,020/14,930, which is the lower boundary of this medium-term descending channel that is in place in 31st of December, and as well as this minor congestion area over here from 20th of March and 23rd of March. So overall, still no change. So I will still maintain that short-term bearish bias on this German 30 index over here. So RSI continue to remain bearish on the hourly chart. No clear signs of a bullish divergence yet, so indicate to us that short-term downside momentum still remains intact on the German 30 index. So I will actually use yesterday's swing high area at 15,250, a slight tighten of the key short-term pivotal resistance to maintain this short-term bearish bias condition heading towards this a retest of this support level. Okay, but however, if you start to see a breakdown below 14,930, then potentially this down leg potentially could accelerate to test the next support level at 14,630 on the German 30. So what's 14,630? So if you go to the daily chart over here, it's pretty much clear. So this is the former range resistance now turns into a pullback support. Previously, it managed to stage a bounce off on the 20th of March this year. All right. So that will be the key short-term levels to key support level to watch if 14,930 is taken down on the downside. But however, if you start to see a break up above 15,250, then this short-term bearish bias condition will be validated to see a squeeze up towards the next intermediate resistance at 15,370, which is this minor descending trend line that is in place in 15th of September. So that's for the German 30 index. So now moving on, lastly will be the US benchmark stock indices. So let us start off with the Dow Jones Industrial Average first. Dow Jones Industrial Average, no change. Price action continue to hit the first support level at 32,990 that we highlighted earlier on. So now it's potentially en route towards 32,770, which is the minor descending trend line, minor descending channel lower boundary that I drew from the high of 20th of September. A break below it potentially take us down towards the next support level at 32,550. 32,570, pardon me. So this short-term bearish bias condition should remain potentially intact as long as the key short-term pivotal resistance, a tighter one for today at 32,270 remains, is not surpassed to the upside. But however, if we start to see a breakup above 32,270, potentially we may start to see the start of a short-term counter trend rebound to test the next intermediate resistance at 33,510, which is this minor swing high area of 2nd of August and 3rd of August, also confluencing with the upper boundary of this short-term descending channel from 21st of September high. Okay, now on the Nasdaq 100, so Nasdaq 100 going to inch down lower. So yesterday we have a much higher short-term pivotal resistance at around 14,980. So given the fact that the RSI has also starts to shape a bearish breakdown below a okay, a parallel ascending trendline support level, no clear signs of a bullish divergence, indicate to us that downside momentum remains intact of the Nasdaq 100. So we'll be using a much more tightened key short-term pivotal resistance today to maintain that short-term bearish bias condition, 14,860, looking for the next support level to be exposed at 14,445 / 14,370. However, if we start to see a breakup above 14,860, then this short-term bearish bias condition will be validated to see a kind of a extension of this counter trend rebound, short-term counter trend rebound towards the next resistance at 14,980 / 15,150. We also confluences with the 20-day moving average that is sloping downwards, okay, indicating to us that right now the US benchmark indices like the Nasdaq 100, the Dow Jones, the S&P 500 is now in the midst of a doing a short to medium term downtrend. I want to highlight very important the daily chart of the S&P. So this S&P over here yesterday it plunges lower, and right now is actually challenging the 200-day moving average. We saw this key support at 4190 level. Okay, so a breakdown below this level, then thereafter the next level to watch, right, is actually this area here. Okay, which is okay, so it's actually a range of 4190, 4190, 4220. So 4190 over here is this lower boundary of this 13th of October 2023 low ascending channel support. So a breakdown below this 4190, right, that means that's really broken down the 200-day moving average. So what we could see all in all, right, potentially whatever rally that took shape on the US benchmark indices from 13th of October low last year all the way up to the rally of June high that was actually being what I call supported by AI related stocks. This is what I call a counter trend, a corrective rebound rather than the start of a major bullish uptrend that will potentially see all-time high. That means if this potential breakdown takes shape below 4190, that means what we could see over here is that there is actually a high, an increase in odds that the US benchmark indices will start to shape another multi-month major bearish downtrend. That is what similar took shape from the high of all-time high of 4th of January last year all the way up down to October low last year. That means another leg of major multi-month bearish downtrend movement if 4190 is taken out on the S&P 500 on the downside. All right, so that's for the benchmark US indices. So what is its implication? For sure, the implication we'll start to see this spill over to the rest of the equity space globally in terms of weakness. Okay. Okay, now lastly, we come to the 32-minute mark. So let me cover WTI crude oil. So crude oil, do we recall that previously we have a bullish bias with the key short-term resistance to watch at 95.80. So the oil price almost hit the short-term resistance level at 95.50 on 28th of September. Then thereafter, it did a slide of close. Let me see how much is it. Yeah, so it did a slide of close to 7%, broke below the 20-day moving average, but managed to still hold above the 50-day moving average over here. So all in all, right, what we could see over here potentially, right, it's still trading in a short-term uptrend for sure. But however, right now it's pretty much a sideways at this point in time. So I'll be using 8606 as a key short-term pivotal support level. So this support level was actually managed to help on yesterday, which also confluenced with the final minor range resistance, now turns into a pullback support as well. So using 91 figure level as intermediate or near-term resistance level. So the boost itself, right, got to actually be further reinforced if it's managed to actually break up above 91 figure level to see a retest back towards 93.80, then followed by 95 we'll call it 80 resistance level, which is also the medium-term ascending channel upper boundary as well. All right, but however, if we start to see a breakdown below 8606, then this short-term corrective decline should extend to test the lower boundary of this medium-term ascending channel, which is supporting at 8630, also followed by close to the upward sloping 50-day moving average. And so this 8630 also confluence with this minor swing low of 6th of September and 8th of September. Okay, so two key levels to watch as OPEC plus meeting looms for today will be the 8606 short-term pivotal support level for WTI oil, which is West Texas oil, and also the intermediate near-term resistance at 91 level. All right, so with that, that should wrap up for today. daily dose of market insights. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.